Thank you for attending the Quantitative Disclosures Summary presentation. I am Kawai in JSCC's Clearing Planning Department, and I will be leading today's call. Today's meeting will be around 30 minutes, starting with an overview of this quarter, followed by the topic of this quarter, and then a briefing on the major risk points. Finally, we will try to address as many of your questions as possible within the schedule. On this webinar, as a special topic for this quarter, we will present a margin simulation for rate products based on the BOJ policy meeting December 2022. Also, the exchange contribution for commodity futures and options was increased, reducing the burden of default fund contributions by clearing members. All of the meeting attendees will be on mute, but if you have any questions, please let us know using the Webex Q&A function. To begin with, Mr. Miyauchi, JSCC's CRO, will give an overview of the quantitative disclosures from the second quarter of 2023.
Thank you. JSCC keeps 71 billion yen of skin in the game, mostly from JSCC's own capital, but it also includes contributions from affiliated exchanges. This increased by 7 billion yen from the previous quarter because of OSC's additional contribution for the ETP commodity market. On aggregate, these were equal to 79% of JSCC's shareholder equity. During this quarter, stress test breaches, where the risk amount in extreme but plausible market condition exceeds pre-funded resources, were observed on 2 days for cash security clearing service, 5 days for precious metal clearing service, and 1 day for the energy clearing service. All of the breaches were resolved on the next business day by the required additional collateral. As for margin backtesting, the cover ratio for IRS fell below 99.5% this quarter again. This was due to the sharp interest rate fluctuations caused by bank failure in the US in March, as well as speculation around Bank of Japan interest rate policy. We will cover this in more detail later today. Other than that, all other clearing services were comfortably within our targets. There were neither liquidity stress testing breaches nor any participant defaults during this quarter. JSCC experienced no suspension of the clearing service during the past 12-month period. Now I will pass back to Ms. Kawai.
Thank you. Page 7 is the first topic of this quarter. Margin simulation for rate products based on the BOJ policy meeting December 2022. JSCC conducted a simulation of the potential level of margin, assuming that the price fluctuations at the July 28th monetary policy meeting would be the same as the price fluctuations following the December 20th monetary policy meeting, as we did in quarter 1 leading up to the March meeting. We provided the simulation results to clearing participants for them to use as a reference in their house and customer position risk management to help them anticipate the impact of future interest rate fluctuations. Specifically, to replicate the price fluctuations experienced on December 20th, 2022, we simulated the shift in the margin assuming that the same price fluctuations as those occurring during the period from November 24th, 2022 to February 28th, 2023 will be reoccur during the simulation period from July 3rd to October 4th, 2023. On July 28th, following the BOJ's decision, interest rates did increase, but we saw lower volatility than in December. Therefore, the PSR was lower than the simulation for 10-year JGB futures. However, the rate rose to around the same level as level December for D-class JGB and 10-year OIS. So for these products, the actual IM increase was close to the simulation. Page 8 is the second topic of this quarter, where the exchange contribution in commodity future and option was increased, reducing the burden of default fund. For ETP commodity, the total amount of DF was extremely large compared to the market size. From the end of June 2023, the exchange contribution for commodity future and options was increased, which resulted in reduced default fund contributions by clearing members in the relevant segments. The increase was to cover only OSC commodity futures and options, and also only for a limited period. Now, back to the PQD. Page 9 is an introduction of JSCC's service structure. The clearing services are divided into 14 categories according to the governing regulations and product features, with each maintaining its own default funds. Please note that in this presentation, some data is presented across multiple categories as the resources may be shared. Page 10 shows financial resources for a participant default, called Skin in the Game, or SIG, and contributions from relevant exchanges and PTSs. Most of the exchange contributions is from entities in the same corporate group as JSCC, namely TSE, OSE, and TOCOM. As shown in the left-hand table, JSCC's skin in the game for ETP non-commodity was 20 billion yen, which is shared by all of the relevant clearing categories. The right-hand table shows compensation by exchanges and PTSs. Compensation by exchanges for ETP commodity increased by 7 billion yen as explained earlier in the second topic of this quarter. And for stress testing, the sufficiency of the financial resources for each category was tested by prorating these shared resources according to the relevant default fund amount for each category. Page 11 shows the ratio of skin in the game to JSCC's capital. The left-hand graph shows the skin in the game to be used before the mutualized default fund, or DF. And the right-hand graph shows the skin in the game to be used before the default fund plus alongside default fund of non-defaulting participants on a pro rata basis. Skin in the game before default fund on the left ranges from 18 to 50% of shareholder equity, and skin in the game before and alongside default fund on the right is from 34 to 99% of shareholder equity. So JSCC contributes relatively large amounts of shareholder equity to skin in the game compared to other major CCPs, which shows our strong commitment to risk management. Page 12 shows the required default fund, which would be mutualized among non-defaulting participants. The graph on this page shows the ratio of skin in the game and contributions from exchanges to default fund from members. The change of IRS default fund was due to the revision of parameter of IM calculation. We will touch on this revision as part of the review of IM on page 17. compensation by exchanges and PTS before default fund for ETP commodity jumped to 103% from 32% as a result of the additional resources provided by OSE at the end of June 2023, as explained earlier. This also contributed to a decrease of the ETP commodity DF by 3 billion yen. On page 13, the data is listed for these graphs, and the amount of potential assessment, or so-called cash call, is also provided. As stated in the footnote, cash call for any ETD is capped at 3 times the default fund requirement, and for OTC product, it is capped at 1 time the default fund requirement. Page 14 shows KCCP. The increase in the FIEA-regulated KCCP was mainly caused by increase in DF due to increase in the Nikkei 225 index. And for OTC JGB, the KCCP decreased as DF decreased due to an increase in initial margin caused by the volatile market environment. Page 15 shows the largest value and mean value of the SLOIM, which is the stress risk amount exceeding IM deposit including add-ons. Please note that due to the PFMI quantitative disclosure definitions, the default fund on page 12 is a value as at the end of the quarter, but the SLOIM on page 15 is the largest or mean value during the past 12 months period. JSCC's default assumption is covered too, except for any listed commodity derivatives other than OSC Petroleum, which is the largest one plus the 5 smallest firms in the net assets. Among all clearing service categories, ETP index futures options had the largest SLOIM with a peak value of 415 billion yen. Page 16 shows the number of days there was a shortfall in the stress testing of pre-funded resources, and the largest shortfall. Breaches are observed on 2 days for cash securities, 5 days for precious metals, and 1 day for energy. But these breaches were all resolved on the next business day through the required additional collateral. Page 17 shows the required and excess IM amounts. The dark blue is the house IM requirements and dark orange shows clients. Light blue is the excess margin for house accounts and light orange shows client accounts. The required amount of OSE listed ETP, IRS, and OTC JGB were the largest at between 1.4 to 2.7 trillion yen. The IM for IRS decreased since the previous quarter due to a decrease in volatility, and for OTC JGB has been increasing since the beginning of 2022 due to the IM methodology, which is less sensitive to volatile than the methodology used for IRS. Looking at the breakdown between house and clients, OSE listed ETP was driven mostly by clients. IRS was evenly split between house and clients, and OTC JGB was mostly house. This trend has remained unchanged for quite a long time. Moreover, the client's excess margin was quite large in OSE listed ETP and IRS, which has also not changed significantly. The data used for the graph on page 17 is shown on page 18 and 19. Now, page 20 shows the number of breaches in IM backtesting for the past 12 months period. As mentioned earlier, the sharp interest rate fluctuations were seen due to heightened financial instability in the US in March, which resulted in breaches in the upper chart. Due to the sharp interest rate fluctuations, the lower table on this page shows JSCC did not meet its target 99.5% cover ratio for IRS. In response to the breaches for IRS, JSCC had a meeting with the clearing members on June 13th and proposed workaround as well as full-scale measures. The workaround measures included a change in the blending number of stress scenarios from 2 to 4. This change was expected to raise the total required base IM by about 3% and went live from July 10th. The proposed full-scale measures will be more anti-procyclical and will require enhancements to our IM calculation system. We are planning to go live with these in the first half of next year, following further discussion with our clearing members. Please note that JSCC sets more conservative standards of 99.5% for CDS and IRS. The upper chart on page 21 shows the largest breaches in the past 12 months, which were about 15 billion yen for ETP JGB futures and options, 19 billion yen for IRS, and 62 billion yen for OTC JGB. This test only looks at the base IM requirement without add-ons. JSCC has confirmed that these breaches would have been covered by resources such as IM add-ons, excess IM deposit, or skin in the game, and the whole amount of the default fund would have remained almost untouched. The lower chart of this page shows the largest breaches in the past 3 months. JSCC started disclosing the figures on qualitative notes sheet of our disclosure from Q4 last year. The upper chart on page 22 shows the quarterly largest value of variation margin, or VM, paid to JSCC, and the lower chart shows the largest value of IM code during each quarter. Please note that while VM needs to be deposited and settled in cash, IM may be deposited in cash as well as various securities and other instruments, giving our participants some flexibility for funding. Page 23 and 24 show the composition of collateral used for IM deposit. On page 23, you can see that the majority of ETP IM was cash, as shown in dark blue and dark orange, but some was in JGB and stocks shown in gray and yellow. Cash collateral was held at either the central bank or at selected commercial banks. The secured cash deposited at commercial banks in dark orange was held in settlement accounts of commercial banks, which are fully covered by the Japanese Deposit Insurance Scheme. On page 24, you can see that the majority of OTC IM was deposited in cash but with some JGBs. Deposit of stocks are not allowed for these OTC categories. The entire amount of cash collateral for OTC JGB was held in the central bank, and for CDS and IRS, the participants or customers may select their custodian for cash collateral, i.e. Japanese trust account or the central bank account in the name of JSCC. The secured cash deposited at commercial banks in dark orange for CDS and IRS was held in such trust account, which is legally protected from the bankruptcy of JSCC as well as the participant. Page 25 separates cash deposits into those for IM and DF. We were holding a total of about 8.5 trillion yen of cash collateral across all the categories. Next, page 26 shows the custodians for this cash collateral with almost 100% held in either the central bank account, settlement accounts covered by deposit insurance, or the trust account. Turn to page 27, covers the liquidity risk management. Please note JSCC's liquidity risk appetite is covered too, but this data is presented based on cover 1, in accordance with the PQD guidance. And while JSCC separately calculates and manages default funds by category for liquidity risk, JSCC calculates and manages it across categories. However, for OTC JGB, JSCC has established a separate liquidity framework using repo with clearing participants. Because the transactions under this category involve large amounts of principal settlement. In the chart, you can see that the liquidity financial resources significantly exceed the required amount, and no breaches were reported in the liquidity stress testing. At the time of a participant default, at least the half portion of non-cash collateral could be liquidated and applied to the settlement with survivors. However, in this data, non-cash collateral is not deducted either from JSCC's payment obligation of the estimated payment or the actual payment. Because to be conservative, we consider that it could be difficult to swiftly liquidate such collateral on the date of default. So we do not regard such collateral as the available liquidity resources. Page 28 shows the liquidity resources for the categories other than OTC JGB. The resources reported as cash at the central bank on the first line and secured cash at commercial banks on the third line include cash in the default fund related to ETP, where at least 50% of the required default fund minus 1 billion yen must be in cash. The unsecured cash on the fourth line shows JSCC's own funds available for use as liquid financial resources following a participant default. The unsecured committed lines of credit on the sixth line shows the committed liquidity available for JSCC's parent company and multiple commercial banks that have been designated as fund settlement banks, and total to more than 1.5 trillion yen. Now we will move on to Q&A. If you have any additional questions, please let us know using Q&A function. The first question we received is, you conducted this simulation twice this year already. Do you have any plan to conduct similar simulations? Or periodically or ahead of expected events going forward? Thank you for the question. Well, we don't have any specific plan to do this, but we may conduct similar forward-looking simulations around once per year, and or before anticipated market events that could cause large margin increases. Another question? Okay, with that, I would like to wrap up today's webinar. Please do not hesitate to contact us if you have any additional questions after the call. Just for your information, you can find today's material recording of past webinar as well as the minutes of QA sessions at the same page of PQD data on our website. So please visit our website if you're interested. Thank you for your time again. We look forward to posting next webinar and speak to you soon. Thank you.